Hello, beautiful. Welcome. Today I want to talk to you about receipts. What are they actually for? Because I see a lot of people wasting time when it comes to receipts, and we don't want you wasting time. You're busy enough. You have enough to do. So let's quit. Let's quit the stuff that is totally unnecessary. So in this episode, I want to talk to you about what receipts are actually for and what you do need to worry about when it comes to them and what they're not for so that you can let that go. All right. But before I begin, I just have a little, I don't know, correction, addendum that I want to add. Um, I recorded a recent Sunlight podcast episode about just like my love letter to different seemingly frivolous or lighthearted or various creative pursuits that a lot of people tend to discount when they do. They're like, I just make stickers, I just make mugs, as though the just belongs there when it doesn't, right? Your creative work is incredibly valuable. It brings something to the person it's intended for that is really valuable to that person. And I gave a couple examples of things in my life that have brought me joy and value. And the funny thing is, I was thinking about it afterwards, and it's kind of like, winning an award and getting upstage and forgetting to thank your partner. Like it's almost like sometimes you take your partner so much as just like a part of your being that you forget to acknowledge them. I'm not saying that's a good thing, but it can happen. Well, I actually feel like I did that with one of the arts. And I wanted to actually take a minute to correct myself because it's so important in my life personally. And those of you who are in this area, I just want to take a moment of appreciation. So, my love letter to dance. um, Dance is just I work with a lot of dancers in my tax practice. I had actually one of my proudest clients. I had a client who won the MacArthur Genius Award for dance. Um, and I've had people who have like really, really cool dance studios that focus on like bigger bodies and BIPOC people and empowerment and like incredible cool missions. Um, Shout out to Midday Movement up in the Boston area, by the way. Also, shout out to the Mark Morris Dance Company, who I am about to fly up to New York as I record this. I'm about to fly up to New York to give a tax talk to the Mark Morris Dance Company, and I'm super excited about it, in part because I used to live about a block from the Mark Morris Dance Company in Fort Greene, Brooklyn. And I'm going to be kind of back in my old stomping grounds, and that's exciting. So if you are listening to this episode through the magic of time and you were at that talk at Mark Morris, definitely hit me up. Send me a little DM on Instagram at Sunlight Tax and let me know you were there. I would love to know. Um, but I just wanted to say for a minute, like what a big impact dance has had personally on me, on my life, like very tangibly. Um, I am a part of a dance class. I discovered it around 2017, 2018. And at that time, something in 2017, something very traumatic happened to me. And I discovered this dance class, and one of the things about it, it was magical. It helped me like reconnect to my body in a way that felt safe and felt pure joy. Like it was purely joyful. Um, and this teacher in particular is so gifted and like makes people feel welcome and excited. She's also incredibly sexy. Everyone in the room like wants to be her. And she kind of like gives you permission to be uh the sexiest version of yourself in a setting that is safe, right? It's different from a dance club where there's like weirdos grinding up against you and there's a lot of drinking. And so it's like this is like a setting where you really can totally let it all out and it's safe and lovely. So this dance class has been the joy of my life. As my children have gotten older, I have gone to more and more classes per week. I'm now up to three dance classes per week with this one instructor who I would follow to the end of the earth. So I just wanted to say, what a big role dance has played in my life in healing something just awful that happened to me that I'm not going to talk about here. But just helping me kind of feel happy and joyful and be in my body. Um, and dance in general, I think, has played a really important role in my life, partly because like I was always terrible at sports. And not only that, I'm the daughter of a professional athlete who I was like, probably a little disappointed that his kids are not athletic in that way. I am definitely the kid who, like, if you put me on a playing field with like bodies in motion and balls flying, I will duck when the ball comes towards me. And I recognize fully that there is a special kind of intelligence for like, that perception that a great field hockey player has, like perceiving who's open near them or in front of them and who's coming up from their left side and who's going to be, open for the ball. I recognize that as a real intelligence and I lack it entirely. No one has ever confused me for a person who's gifted in sports. Um, but dance actually was a way that as a kid, I was able to be in a place where I felt good at being in my body. Like I can do form, I can do yeah, I can copy a teacher and I can do a move. And just there's something about like feeling the music, like you feel it. It's something you're following a feeling. So um and the other thing I just want to say, like as an adult, to bring this full circle, and then we're going to talk about receipts. To bring this full circle is that um I think sometimes, and if you are this way, if you like me have identified kind of as a smart person for most of your life, I think I personally have gotten really used to like thinking my way through problems. And that's served me pretty well. And I really have managed to kind of get through a lot of stuff just using my brain. But I actually think that's a bit of a mistake, or I have tended to develop an over reliance on my brain as though I could think through everything, every bad feeling, every experience. And the fact is, dance is one of those things that reminds me that, in fact, I can't. I am a human in a body, and my body is important. And, hilariously or amazingly, there's all this incredible research now talking about somatic experience and you process feelings through your body. And I mean, I can just say that with absolute confidence. I go to dance class in a terrible mood and I leave feeling joy. So like it's obviously true. I as an experiment of one, I can say for sure that is true. But it's just helped me. Oh my God, it's like revolutionized my life. So I feel deeply thankful for those talented, amazing dance instructors out there who make a person like me feel, I don't know, safe and sexy and fun and with it in the classroom, in the safety of the classroom. And even if you're just watching dance, it's beautiful. So just to all the dancers out there, this is a little thank you, a little love letter. And to Elisa, my instructor in particular, you are truly incredible. I literally would follow you to the end of the earth. So, all right. With that all said, let's talk about receipts. By the way, if you're not a dancer, if you are a practitioner of a different kind of art, I did a whole podcast episode really like trying to just give an appreciation for the arts, even ones you might consider sort of minor. So definitely go back and listen to that because I think a lot of you need to hear it. All right. Okay, I'll put a link to that episode in the show notes. All right, so receipts. Let's talk about it. There's a stereotype, of course, with receipts, that like a person who's like really disorganized with their taxes, they show up at the accountant's office with a shoebox full of receipts, right? That's the stereotype. Probably most of you don't actually do that, but nevertheless, receipts cause some headache. And I think they're really confusing because people sort of know in their brain, I know I need these. These are very important. But when I actually like bring one to an accountant, the accountant is mad at me. The accountant is like, what are you doing? Right. So that's confusing. Right. So why does the accountant get mad at you? But why do you need them? Okay. So here's the thing. really good news is sorting receipts is a total waste of time. You do not need to do it. Receipts are actually for deep storage. You have to keep them. That is true, and that is the law. And you want to keep them for 7 years. And the reason there is because the IRS can ask for them for up to 6 years. So if you have them for 7, you are covered, right? You have them for the timeline in which they could become requested, okay? But they really only need to go into storage. They are not for active use. What is for active use, my friends, is your bookkeeping, okay? So bookkeeping is done not from your receipts. If you're trying to do bookkeeping off of your receipts, you will experience so much stress and headache. It will be messy, it will be disorganized, you will lose things, you will lose track of things. Don't recommend. So let's talk about what is a better way to go about your bookkeeping. Okay. So before we talk about what's a better way to do your bookkeeping, let's just talk about what the purpose of receipts, what the purpose of receipts is. So taxes in our system are retroactive. Okay. Let's take an example of someone who's an employee, right? If you work as an employee, you receive a W-2, then first of all, you have third-party verification on your tax return. Your employer is going to send you a copy of your W-2, and they send a copy straight to the IRS. So the IRS has the record of everything that employee earned for the year, and there's really nothing to check up on, right? Because somebody else is vouching for it. They're saying like, these are from my payroll records, which are, like highly scrutinized under the law. So we know that they're accurate. And this is what I paid this person, right? So there's no ambiguity when you're an employee. You get this employer statement saying what you earned, and that's it, right? So the IRS rarely audits a person with a W-2. Of course, they might audit other things in that person's tax return, but they're rarely going to audit the W-2 itself, right? There's just no reason to. Of course, if there was some giant red flag, they could. It's not that they couldn't, but there's just not a lot of reason to. Those things generally are correct. So, and the other thing about being an employee is that employees are not allowed to take any tax deductions. There's nothing deductible when you're an employee. So there is no tracking of your deductions, right? So an employee just has less work to do. It's easier. When you're self-employed, the situation is quite different, right? When you're self-employed, you, first of all, you get to take deductions, right? That's awesome. It's an awesome thing. But the cost of taking deductions is you have to actually track them, and you have to maintain the records that prove that those things really happened. In other words, you're not allowed to just make shit up. You're allowed to take deductions, but they have to be real. And you have to have the ability at any given moment to prove that they are real. And the way that you prove that they're real is with a receipt, right? Now, this is not such a terrible thing. You get a receipt when you buy a thing generally. So it's not that hard, but it does require just setting up a little system to capture all your receipts. Okay. That's really it. So when you are self-employed, you get to take deductions, but you have to track your receipts, okay? Also, you're self-reporting your income as well. So this is also a thing that's tricky, because here is a place where there is not always third-party verification. You are self-reporting your income, and you are self-reporting your deductions, okay? So if you just think about that from a logical perspective, you could make mistakes, even without any malice, even without any ill intention. You could mess up, you could make mistakes, you could misunderstand the tax law. You could be using the wrong rule when it came to your, mileage deduction or your meals deduction, right? You could misunderstand what the law says and be doing it wrong, okay? This is not because you're a terrible person. And it's not because the IRS wants to punish you. It's just a fact. It's just a fact of human nature and, the frailty of human record keeping. So this is why people who have Schedule Cs, people who are self-employed, and when you're self-employed, you put that income on a part of your tax return called the Schedule C. And people with Schedule Cs are audited more frequently. In fact, fairly frequently compared to employees who are almost never audited, at least not for the employment part of their tax return. Okay. So it's not to punish you. It's just because if you think about it, you think about this huge population of people who, one, maybe getting the rules wrong, two, are self-reporting everything without third-party verification, and three, could possibly take advantage of the system and be making stuff up, right? You consider that from the perspective now, not of you as a self-employed person, but from the perspective of the US government, of tax collection in this country. You better check up on some of them sometimes, right? It's actually really important for our system to function well. It's important that audits do happen to just check that people are applying the rules correctly and actually following them. Okay. So what happens if you get if you get audited? An audit is a checkup. It's not an accusation. So you can be audited as a person who has a Schedule C, and you can have done every single thing right. It doesn't mean you did anything wrong. And actually, I've seen this. I've seen people get audited. In fact, I myself was audited one time. And this was even during the years that I was already a tax professional. It was early in those years, but I had done everything right. I had followed the letter of the law, and I knew I had. And actually, so I wasn't as freaked out by this audit as most people would be, because I knew that they had a right to do it and they were checking up. And when I called the person, this was actually a state audit, this was North Carolina. I took a tax credit for a deduction, a tax credit for taxes paid to another state. I had paid all this income tax to New York State, and I took a credit against North Carolina tax. Well, I came to learn, I was kind of coming to it from a place of curiosity. And of course, it's also a pain in the butt, and I didn't love it, but I knew what to do. And I called this North Carolina agent on the phone. He was totally nice. I was like, look, I understand what's happening here, but I'm just curious, like, what, do you audit everybody, or, like, what's the story with this? And he was like, actually, you know what? Every single person who takes the tax credit that you just took, we send an automated audit letter to them. So there was no way around it. You would have gotten this letter no matter what you did. And I was like, okay, cool. And I actually was able to talk him back on some of the records that he required. Like, in this audit letter, they asked for the kitchen sink. They asked for like every single thing in my tax return. And I know as a practitioner that I can limit the scope of what I actually give them if I talk to somebody. And I did that. And I was like, hey, I think the only thing you need to prove is this and not all these other things. Can I just skip sending you the records for all of those things? Can we agree that I just need to send you these? And he was like, yes, of course, that's fine. So I want you to know that even though that happened, it wasn't such a huge deal. The fact that I knew what to do meant that I was able to limit the scope of the audit very quickly and very easily. The guy on the phone was like really pretty reasonable and nice. He wasn't from the IRS, he was North Carolina, but still, the people on the other end of this are also human beings, just so you know. Okay, so I got a little off track there, but basically what I want to say is audits happen. They happen to people who have followed the law to the letter. Even people who are professional tax practitioners like myself. And sometimes they're automated. Sometimes they just say, everyone in this category, in this geographic area, we're just going to audit all of them. This will happen. And I was a part of that. That happened to me. So, the fact is, you should approach your taxes as though you'll be audited for anything in any given year, because in fact, that is the rule. You can be, right? So you don't want to put things on your tax return that you don't have the records for, that you could not defend if you were audited, because taxes are retroactive. It might feel okay to do it today, but that audit letter might come a year, 2 years, 3 years down the line when your records are, hopefully you've kept them well. They're in the storage that they should be, in a place that you can find them. But if they're not, you're in trouble. You're going to have a bad time. So this is what receipts are for. Basically, the IRS, especially with people who are self-employed, it has the right to ask for your records at any time. And so a really typical audit for a freelancer is to just come in and either examine all of your Schedule C deductions or take a couple selected categories. And I'm going to give you a hint. A lot of times, the selected categories are the ones that are often abused. They just want to make sure you're not abusing them, that you are following the rules, right? So meals and travel, those are the most audited categories. Mileage too is very highly audited. And if you just think about that for a second, it makes sense. These are the areas that people tend to get a little slap happy on and over apply, right? They take them a little too aggressively. So the IRS, which completely knows this, comes and sends out those letters and like, hey, we want to see all your receipts for, meals and travel. And there you go. Now you better produce those receipts. So the role of receipts is as that documentation. It's as that proof. And so what you want to do is put your receipts into storage. And remember, receipts come in two formats these days. You'll get physical receipts sometimes, but I don't know about you. I run an online business. Most of my receipts at this point are digital. So you not only need to track your physical receipts, hopefully in, a file folder, you also want to be tracking your digital receipts. So to me, what I recommend to people is you just have a file in your inbox or like a category in your Gmail. And you just, every time you, purchase a business item on Amazon or wherever it is, you just move it. You just move the receipt into that folder. Okay. My other tip for you is receipts you should file them by year. And the reason that this is something very important for you is that audits happen by year. So the last thing on earth you want to do is just dump all your receipts into one bucket where they're unsorted, because that will give you a nightmare if you ever are audited. What that will require of you is to go through them all and sort them out by year. That's more work than you ever need to do. If you just open a separate file folder, whether it's physical, in your filing cabinet, or digital in your Gmail, if you have a separate folder for each year, then when the IRS comes and says, hey, we want to look at, tax year 2021, tax year 2022, you can just go to those two folders and pull out only the receipts from those years. Okay. So hopefully that helps you understand kind of what receipts are for. Now, a lot of people think that they should do their bookkeeping from their receipts, and this is a bad idea. The reason that's a bad idea is it's just a mess and it's disorganized and you'll hate yourself. And I say this as a person who used to do it that way. And so I recognize the pain. So what you want to do, the best practice here is you want to open a separate bank account for your self-employment. So it doesn't actually technically need to be a business bank account according to your bank's rules. What it needs to be is separate. And what you need to have in there is only business stuff. So you want to put your income that comes into you from that self-employed work into that bank account. And you want to make your expenses out of that bank account. Okay. And when you do that, what you end up creating is a paper trail. Okay, so you end up creating bank statements which show the flow of money into and out of that bank account, right? That, my friends, is how you do your bookkeeping. You look at the bank statement, because that bank statement, so long as you keep the rule really crystal clear in your own mind, I only spent, my business expenses, I spend out of this account, right? So long as you make that your rule, and also you deposit all your business income into that account, that bank statement is going to be the full and complete record of money into and out of your bank account. And that's how you do your bookkeeping. Now, you may complicate this a little by having other accounts. You may also have PayPal. You may also have a business credit card, in which case you're going to have bookkeeping that goes off of not just the bank statement, but also off a credit card statement and a PayPal statement. That's fine. It's a little more work, but it's totally doable. It's very normal. I certainly have all of those elements in my own bookkeeping as well. So that, my friends, is how you do bookkeeping. That is the role of receipts. All right. Awesome. So if you have questions about receipts, about tax deductions when you're self-employed, this is the time of year when I am doing work on my deductions guides. Now, a lot of you found me on the internet through my deductions guide. It's something I'm very, very proud of, my visual guide to tax deductions. And I go through it every year and I do updates so that it's updated for the following tax year. Now, the guide right now is up to date. Don't worry about that. But I am about to switch it over so that it shows tax year 2024 rules. And as I make those changes, I would love to hear from you. I'd love to hear if you have any questions about what's deductible. Tell me what field you're in and what kind of deductions you make and you can't figure out how to categorize them. Or if you want to know how the record keeping works. These are things that I will incorporate into the next update of my visual guide to tax deductions. P.S. If you don't have that guide yet and you want it, you can get it. It's free at sunlighttax.com/podcast guide. Okay. sunlighttax.com/podcast guide. And if you want to send me a DM about your deductions question, you can send it to me over Instagram at sunlighttax. Also, if I get a lot of the same questions, I may do a listener question episode where I answer some of them more sooner, in the next couple of weeks. So definitely let me know. I keep a spreadsheet of all your questions that you DM me, and they do end up in episodes, just so you know. Okay. So definitely download that guide if you don't have it already. Definitely send me your questions if you have any questions about deductions, because as I do those updates, I really want to make sure that this guide serves you in the best way possible. I also want to make a little call out to those of you in the wellness space. Now, I have 6 different versions of my deductions guide. I have one for creators, which is sort of a generic one. I have one for online business owners. I have one for performers, one for makers, one for visual artists, and one for designers. However, I have a lot of people in this space who are in the wellness fields, right? Healers, therapists, somatic practitioners, all of these things. So I've been considering making a dedicated guide for people in the wellness space. So if you are in the wellness space and you have some questions, or if you just want to tell me some examples of weird or, industry specific expenses you make, definitely send me a DM. I would really appreciate it because your input will definitely inform that guide. So I hope that helps. All right. And then my last bit of housekeeping is that tomorrow I am hosting an open house for my program, Money Bootcamp. I recently had a launch, so you may have heard me talk about it a little bit. But if you are curious, if you are feeling like you want to get your record keeping really up to snuff and learn some strategies and systems, and including how to set up a really good simple bookkeeping that is more tax specific, tax smart, you are welcome to come to my open house tomorrow, where I'm going to there's no pitch. It's very low key. It's just drop in, and you can come to the open house and you can see me screen share about what's inside my program. So I'll show you some of the tools that are inside Money Bootcamp. I'll ask you any questions you want. You're welcome to bring your spouse if you're married filing jointly. Sometimes you want to check in with that person before you make this purchase. So feel free to bring your spouse. You need to register to come to the open house, but it's free. I'm including the link to register in the show notes. And that really is just so that I can send you reminders. And if you have questions I couldn't get to in the open house, that I have your email so I can follow up with you. Okay. So definitely, if you're interested in learning, seeing a screen share about Money Bootcamp, asking me some questions about it, super low key. That's happening tomorrow at 2:30, I believe, Eastern. And the registration link is right there in the show notes. So I hope to see you tomorrow. And if you want that deductions guide, sunlighttax.com/podcast guide. All right. It's been great to talk to you, everybody. I will see you on the next one. Bye. Thank you for watching. If you like this video, be sure to leave a comment, and subscribe to my channel. I'm so grateful for that. This video is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.